Yeah, just to give you some overview of exactly who Sanlam is, and briefly just go through what we do, and ideally try spend more time on question and answers so that we can be able to understand each other, and ideally that's where the meat of the discussion would be. But just for a quick overview, in terms of who Sanlam is as a group, Sanlam's the largest non-financial services firm in Africa itself. As a group, Sanlam is spread in over 33 African countries and currently manages over $82 billion across the globe. That's as a group. However, for our exposure, or our where we come into the picture ourselves, we are Sanlam Investments East Africa. We've been operating for the last 25 years in Kenya and since 2004 in Uganda. We are licensed and regulated by Capital Markets Authority and the Retirement Benefits Authority as well. So that's just a quick overview of you. We are a market leader in our region, whereby in Kenya we manage about 20% of the pension industry, and in Uganda we manage about 43% of the industry. But this is one of the key things that I normally like to inform our clients is, as a business, since we've been operating for 25 years, we are the largest fund manager, whereby we currently manage in excess of 430 billion Kenya shillings. This is not something we woke up overnight with. It's something we've built over the last 25 decades. And I only feel this is more comforting to anyone hearing, because you'd want to be associated with a company that has grown over the years rather than one that just shot up more or less the other day. But that's just a quick overview of ourselves. So what I also decided to do was I decided to put mugshots of people that are part of the team, the core management team. And I don't expect everyone to know someone, but you have myself on the management team as well. But just to give you a insight is, people at the firm generally tend to stay for a very long period. You'll just notice that everyone has an average of about 16 years of experience at the firm itself. But in the firm itself, people have been with the firm for a very long period of time. And just coming now to the meat of today's discussion, ideally, what is a better way of how we can be able to guide you on your financial journey, or how can we make financial titans ideally? And what we thought would be a good idea for you guys to understand is something we call Sanlam Unit Trust. Just for example, what a Sanlam Unit Trust is, take for an example, Valentine's got 100 shillings and I've got $1 million bob. As compared to Valentine taking 100 shillings and going to a bank or going to a government institution with 100 shillings, she might not get a good rate of return on it, simply because of the size of the amount. So what we do as a firm, will say, all right, let me take Valentine's 100 bob, I take Gorang's 1 million, and I take someone else's 10 million, and I pull the money together. Therefore, the next time when someone goes to invest, their 100 bob is no longer seen as 100 bob. It's part of a bigger pool of money. And where we really add financial muscle into this picture is because as a company, we're already managing in excess of 400 billion shillings. We are able to negotiate and get a better rate of return than what you would have done as an individual. And that is what gives birth to one of our key solutions. That is called the Sanlam Money Market Fund. Ideally, just for you to get an understanding of what a money market fund does, the main objective of the fund is, one, to make sure your capital remains preserved. What we mean by that is, ideally, if you've invested 100 shillings, you'd want to wake up seeing that your 100 bob remains preserved. It's not dropped at 50 bob, it's growing at a steady rate of return. And how we achieve this is, we invest these funds into what we call fixed income securities. This is ideally things like government treasury bills, government bonds, bank and call deposits, all with an idea to preserve your capital. But the beauty about how this solution actually works, and why we feel it's a game changer for you to plan your financial journey as well, is whereby it gives you access to your money whenever you need it. Anytime someone wants their money, let's say maybe on M-Pesa, they can have the funds within an hour or two. They want it on their bank, it's sent to their bank. And at no stage are they ever losing on interest earned, because on our side, what we actually do is we are going to calculate interest every single day on whatever someone's balance is. What does that actually mean? Let's say, for example, Valentine started off with 10,000 shillings. And tomorrow she told us, by the way, I have an emergency. Can you send 3,000 shillings on my M-Pesa? What we will do is, the way we would calculate interest is, we'll say day one, your interest would be calculated on 10,000 shillings. Day two, because Valentine removed 3,000 shillings, her balance was only 7K. On day two, we would calculate her interest on 7,000 shillings. And that will keep on going on. And she can add money and withdraw money at any given period of time. And whatever interest is actually earned is then just compounded at the end of the month. So if she earned 10, let's say she earned 30 shillings of interest at the end of the month two, her interest would now be on 7,030, just because of the 30 bob interest that was done. Now, in light of what has happened, obviously over the last couple of months as well, is we've seen the shilling also on one end depreciate slightly, and you can just see our current Kenya shilling against the dollar is just valued at around 148 to 149. In light of the same, we thought a different financial journey, whereby why are we only giving people an option to only invest or save in Kenya shillings? We have the same kind of a product, however, just structured in dollars, whereby in Kenya shillings, someone could earn about 11.8%, but on dollars, our return is just around 6.5%. But the idea is more or less the same, that how can we be able to give you financial freedom, whereby you're able to plug and play and invest in the comfort of where you are, be able to monitor, track your performance, be able to set objectives, be able to grow goals, and be able to grow what your wealth is. So ideally, this is what our solutions, not solution, I would say, this is what we would normally recommend for people who want to just start off in terms of savings or looking to grow their careers in wealth management itself, or just being able to add something on your financial journey. And to be honest, I think the way the funds are structured, we're looking at different routes of what people can do. Ideally, it could be something for a rainy day, emergency fund, or whether you want to plan something with, but just to give you an idea what it's actually headed towards too. But I'd like to stop on that note. And the only reason being is, I think it would just be more, rather than me doing all the talking, I think it would be much better just for people to ask questions and tell us what actually have they gone through themselves, where are they financially, what assistance do they need. And from our end, maybe I could just put up something that we do financial planning as a free item. We don't charge anyone to learn about financial planning or anything around it. So Valentine, could I open the floor for questions, or maybe I can just pass it back on to you and we can see how best to proceed on this.
Hi, Garang. So for now, there are not yet any questions written on the chat. Maybe you could tell us the requirements for opening the USD dollar fixed fund, since it's a new product in the market, so that when people hear, if they have a question, they'll do a follow-up on it. You could do an overview of the dollar fixed fund as we open the floor for questions. Yeah.
Yeah, so just an overview, and like I mentioned to you, the whole idea of how we got into the dollar fund was obviously a lot of people, apart from just saving in shillings, realized what if we could diversify our investments and have something earning in a different currency itself. And we said the best way to do this was have a fund that invests into a different currency, that being dollars itself, because it's easily be able to buy and sell onto a platform itself. And the idea based on this is now whereby the same fund has the same characteristics or features, I might say, whereby we invest this into fixed income securities, ideally like dollar denominated bank deposits, and also government of Kenya Euro bonds, to be able to drive up a sustainable rate of interest But at the same time, the plan is whereby someone wants access to their money, they can still get it, and interest is still calculated every single day from our end. So that was the idea of the dollar fund, and from a top overview, I think it's a good idea, just because anyone trying to save funds, it just adds value that you have something in your shillings. It doesn't hurt you holding something in dollars as well, just as a way to spread out, just as a way to spread out your risk at the end of the day.
Lynette
And
Kialo. Yes.
Sorry.
Lynette Kialo has asked, how is the USD denominated money market funds work? How is the interest rate calculated? What is the underlying asset that the funds invest in? I think this is what people are really interested in, underlying assets.
Okay, so like I just mentioned, what the funds ideally invest into. Currently, the funds invest into two categories, like I mentioned. Overall, these are all invested into what we call fixed income securities. The first one that the fund invests into is the government of Kenya bonds. These are just Euro bonds, ideally. Euro bonds are just instruments whereby the government is borrowing money in dollars from either local investors or overseas investors, but it's the government of Kenya borrowing in dollars to either do projects in the country or infrastructure projects or something like expanding for the country. So that's one of the areas that we call a Euro bond, that is issued by the government, by the Central Bank of Kenya itself. That's one of the areas the fund actually invests into. And the second one is we invest into commercial banks. These are local commercial banks who give us facilities of dollar-denominated call deposits and dollar-denominated fixed deposits as well. So those are the two key areas the fund currently invests into.
Why is the interest rate lower than the Kenya shillings denominated MMFs?
Yeah. All right, and maybe this is just for everyone else to understand how it's lower. Number one, we have something we call a benchmark, whereby we have to try and compete to a certain level of return. Okay, and currently what we benchmark our money market fund is on something we call the local treasury bill. All right. Currently, treasury bills are just ranging above between 13 to 14.5 or 14.8%. So that's why the money market fund is more closer to that mark of level. For the dollar fund, the reason that it's a lower rate of return, or what might seem a lower rate of return, is because the benchmark for the fund, or what we're trying to mimic, is what we call a US treasury bill for 90 days as well. But across the spectrum, if you are to try look for an investment on dollars whereby you still have you're looking for sustainable return, they would normally range between the 4 to 6% or 4 to 7% range as well. So it's just how ideally things are in the current economy as well.
Tracy asks, is it possible to invest in different products that have different levels of risk under one MMF account?
So Tracy, unfortunately, how can I say this? It's what we have is we've got a basket of funds, if I may say. All right, MMF is what we normally call is a less risky option, whereby ideally what we wake up doing every day is to make sure your capital remains preserved. But we have other solutions whereby we can also invest into stock markets, but the level of risk substantially is much higher in that, whereby the level of risk we take on shares or stocks is if stock prices go up, you make a great return. However, if stock prices don't perform too well, you could even lose your capital ideally. So yes, but it's not called a money market. Everything just falls under what we call a unit trust. So we've got other solutions for people who have the ability and willingness to take a higher level of risk as compared to someone else. What we thought would be easier is what could we inform you that is easier in terms of a risk level, which is very low and ideally aims to preserve capital at the end of the day as well. But that's what we thought would be an easy solution. But like mentioned, we also have products or solutions that people with a higher level of risk can still take.
Access details. I think it's I made it open. Let me check again. Anyone else who has a question and can unmute to ask? The floor is open. Eve has, is the risk in USD fund the same as the Kenya shilling fund? Is the risk of the underlying asset similar, or are the Euro bonds safer than the Kenya shillings denominated bonds? The concern here being the risk of debt restructuring or default by Kenyan government of Kenya.
Sorry, Valentine, I didn't catch which question you want me to pick on, sorry.
One. Okay, so we start with the first one. Is the risk of the USD fund same as the one for Kenya shilling fund?
Okay. All right. Thanks. I've seen which one you're saying on the chat box. Thanks so much.
Yes.
All right. So in terms of risk, at the end of the day, look, as a fund manager, our job ideally comes down to risk management itself and what measures we put in over there. And maybe just to take a step back before I address your question on what Eurobonds can do and what local government debt do as well, is like I mentioned to you first, the objective of the fund, of the money market fund that we have, and also the fixed income dollar fund we run, is we want to ensure. Sorry, I don't know if someone was trying to add a comment over there. Should I just wait?
Just continue.
Okay.
The mic was open.
Yeah. So just giving a quick overview of what exactly it is the main thing we do as a fund manager is ideally we want to ensure that someone's capital remains preserved. We aim to ensure someone's capital remains preserved. But ultimately, the risk on the fund obviously lies that if something were to go down, hypothetical worst case scenario we're taking here, that the government was to default, that would be what we call a very catastrophic event across the whole economy itself. So I think you are taking measures of a Eurobond, which is still backed by the Central Bank of Kenya, ideally acting as a fiscal agent of collecting funds on behalf of the government. And the government has two ways of how it raises cash. One is using local denominated currency, which comes through your ideally treasury bills and government bonds. But if it wants to raise money in a different currency, that's what we call a Eurobond. But the risk is it still becomes a risk for what the central bank is collecting on behalf of the government itself. So I can see another one.
The last part of restructuring debt. Concern here being restructuring of, I think you've mentioned on that.
Yes, I think I just picked it up, but I can just go to the chat box and answer the other ones. I can see them coming in.
The withdrawal charges.
Okay, give me a second. I'm just getting there. So yeah, we ideally allow one withdrawal free a month on our end. However, on the dollar fund, any subsequent withdrawal in a month is charged at $5, an additional of $5. Sorry, yes. So one withdrawal free a month, any subsequent one would charge $5 from our side.
Do you invest in other countries' government bonds, or is it for Kenya only?
As I mentioned, we only invest into the government of Kenya Euro bonds.
Okay.
Yes.
Advantages of investing in USD denominated money market fund. Why should one consider it as opposed to the Kenyan denominated one? Apart from diversity?
So to be honest, I'll just take a step back again on the same question.
Yeah.
And I'll say one, like I said, diversification is the biggest thing. It has to be your top objective at whatever you're trying to plan. And the saying is quite simple: don't put all eggs in one basket. And it's the same thing whereby you've got a Kenya shilling product which is already earning you a great level of return, about 11%. But on the second end, We also have items whereby the dollar would be strengthening maybe a certain period. So we're also looking on that. So it adds for you to get a mixed bag of investments. And we always say that it's always good to have a portfolio whereby you've spread off your risk. So one, diversification, and also risk element comes into the same place.
And I think I had a similar question to Sandra. Is it possible to convert part of your Kenya shillings denominated MMF investment to the dollar USD denominated one?
Yes. So ideally, we give the option to investors already who are on the fund, whereby they can convert from shillings to dollars. However, it is pegged on an exchange rate we get from our custody bank.
Yes.
Our custody bank in this case is Stanbic Bank. So it's ideally pegged to what Stanbic Bank would give us as an exchange rate. So we could facilitate that internally from our end as well.
Is Sanlam investment internationally rated?
So Sanlam Investments is rated. I'm happy to drop a link over here for you to check out how our ratings are. And maybe just for the team to know, Sanlam just also had one of the largest mergers also happening in Africa itself, whereby Sanlam just entered into a joint venture to merge with entities with an entity called Allianz. So some of the entities will later be called Sanlam Allianz as well, to just increase the strength of the business as well. But yeah, Sanlam is rated. We'll be happy to share a link for you to read about our debt rating as well and what we are rated.
Okay. Eve is asking, for someone earning in Kenya shillings, which is most Kenyans, how can one reduce transactional charges as they convert to dollar and back? Because banks can easily eat up the profit.
Yeah, so this is a really good one, by the way. I kid you not. The best way we actually find people taking a way around it, and that's why I'll just come back to the same, is transactional charges really are high through the roof in terms of how you want to try convert them. But what normally people do is, it depends on what amounts you're trying to convert and what's the frequency of it. Ideally, someone who is earning Kenya shillings every month, what we would recommend is your initial place to doing this is either you bulk up all the funds you're getting, and let's like a similar hypothetical, maybe you're saving every month something on your money market fund. When it becomes a sizable amount that you're comfortable investing into dollars, we can even do that. So maybe bulking up your savings rather than saving as a one ticket every month would be a better option of how you can save that as well. But the other one we normally find is across the banks as well. Everyone has a different exchange rate they would give you, and you don't always realize that one bank's different. One bank hypothetically could be converting dollars at 150. There's one converting at 148, another one at 151. So it wouldn't hurt you doing more research on what options are there for you to convert as well, ideally.
I think that's all for the question of the dollars. Thank you so much for your time.
Okay.
I think we can now proceed to the next session of the meeting. Anyone else who has a burning question on the dollar MMF? You can unmute. I think we are good for now. Beyond the USD MMF, what other options, non-Kenyan options are there available as Sanlam?
Like I mentioned, apart from the USD fixed income fund we have, I mentioned we have a Kenya shilling money market fund, which is currently earning about 11.8%. And it's whereby you still have access to your money at any given period of time. The idea is it aims to preserve your capital. There's a mobile app, online portal whereby you can be able to keep track of it. So it's not only USD we have. Apologies for that if it was not clear, but our how do I put this? Is our flagship product ideally is we've got a money market fund for Kenya shillings. The dollar is just something we've just started running as well, but it is not our flagship product, but it's just a diversification vehicle we are giving to our clients. So my apologies if that wasn't clear. But yeah, ideally our money market fund is our top thing as well.
Patricia is asking, how much is your commission? I think she meant management fee. How much is the management fee for the US dollar? Because the normal Kenyan MMF is usually 2%. How much is it for the dollar USD?
So maybe I'll just pick one. One is, as a regulation, we're normally required to tell you the rate of return on our investments, which are net of all our charges. For our Kenya shilling fund, our Kenya shilling money market fund, our management fee is 1.2%. What that means for an individual is you're looking to earn 11.8% on the fund. The only thing that we deduct from there is withholding tax, which is paid directly from us to the revenue authority. On the dollar fund, like I mentioned, our return is just around 6%. That is net of our management fees. Our management fees, though, 1.5%. However, we would still pay withholding tax on that 15% on the interest earned and remit it back to the regulator. If I see a question again, query is other options which are not in Kenya shillings. Unfortunately, for now, we only have one option that's not in Kenya shilling. It's the dollar fixed income fund we are actually running. And that, like I mentioned to you, it's just something we've begun. Ideally, it's just because of client requests that we've been having for them to find a way of just spreading their risk, or even finding a different way of how we can increase their wealth or diversifying their investments.
Thank you so much, Garan. I think you've given good insights on the dollar MMF.
However, maybe just for everyone to know, the dollar MMF is not our only product. It's not our key product. Yeah. It's the Kenya shilling money market fund, which is what actually drives a bigger chunk of our business as well.
Yeah, okay. Yeah, thank you. You're getting claps from Patricia. So I think, thank you for your time. I think we'll move on to the next session of the webinar. Give me a few minutes. I share my screen.
Thank you, Valentine. Unfortunately, Valentine, could I kindly request that I could just drop off? There's another engagement I really have to join as well at the same time. If you don't mind, and the audience is fine with it. But yes, I'd be happy to, in case I haven't answered anyone's questions, I'm happy for you to give my details in case anyone wants to have a chat, or they could just ask through you and we'll be able to answer any other questions that have come as well.
Yes. Thank you so much for your time.
Thank you very much, and it's been a pleasure.
It's been a same here. Are you able to see my screen? Hi, guys.
Yes, we can see your screen.
I see my screen. So let's move on to the second part of the session. How to maximize returns on the money market fund. So maybe if I could ask on the chat, how many of you do have, Munena, you want to share their contacts? Yes, I'll be able to share their contacts, yes. Anyone else with a final question on the MMF? So the dollar MMF and the Kenyan MMF work almost in the same way. And he has mentioned on one of the ways to maximize returns on the dollar MMF is by bulking it out. Use money through the exchange rates. So I want to ask a question on the chat. Are any of you in a chama? The Kenyan original way of saving money? Please respond on the chat. The number one way of Kenyans, yes, Patricia. Yes, no. Yes, you're in a chama. So most chamas, I think you meet on Saturdays. Some chamas have deadlines. If you're late, you're penalized. You're able to take loans from the chama. So let's say you met for your chama meeting on Friday, or no, on Saturday evening, especially if you're women, you met at 2. So after the chama meeting, you went back home and you contributed the amount, you gave money to the treasurer. And then on Sunday, when you go to the supermarket after church, you find the treasurer that collected the money of the chama. You find them pushing a big trolley, and they even going back, they're on the electronics section, checking out the new fridges. What would be your first instinct? Their trolley is filled, especially in this economy. They are shopping, bulk shopping. They're even looking through electronics. What would be your first reaction as a member of the chama who just contributed money to the Please respond on the chat. What would be your reaction? Yes, Munene, I knew it. Anyone else? What did you know, Munene? Unmute and say.
I knew all along this person was just waiting for our money.
Our money, yes.
Our money.
Our money, yes. And what is the first thing you'll do? Call other members, text them on WhatsApp, go Singia WhatsApp. You'll even take a photo of the treasurer shopping, because the first thing will be our money. So money markets work in the same way as a chama. They are a collection of a collective investment scheme where they pull together many investors. So as the same way as a chama, your chama members, a unit trust fund works the same way. All of you pull your resources together and put your money together to a fund manager. In this case, Sanlam is an example of a fund manager, a registered fund manager by CMA. So, and then the money is invested together in a fund manager in the same fund. So if you contribute 200, you're given 200 units as the unit holder. You contribute 1 million, you're given 1 million units. So in Kenya, the only unit trusts allowed to trade to the Kenyan public are the ones regulated by the Capital Markets Authority. And they must comply with the Capital Markets Act 485. So how unit trust is run, the structure of an MMF, of an unit trust. An MMF is an example of a unit trust. So a unit trust comprises of a fund manager, administrator, and custodian, and trustees. Investors come in as now the pool of people who are now investing the seed capital. The fund manager, in this case Sanlam, they are the ones licensed to take the seed capital. They execute the fund, the deeds with trust, and the distribution to the agents. The trustee is now like let's say like a prefect who manages all these things. Like now, CMA is usually on top of all these. So the fund manager is able to, maybe in this case, you can say now CMA is like the trustee or like the prefect. The investors is people who invest in that fund. So the fund manager, I don't know if you're able to see my slide well. The fund manager is the one who controls, they decide where the money is invested. And they manage, they say this is the amount that is taken to T-bills, commercial papers, and CMA has a guideline of how the fund managers need to execute. They're not able to exceed a certain amount. Like you can't put like 80% of your fund in a long-term investment if it's an MMF, which has a short-term flexibility. The administrator, this is like the auditor who audits the fund manager. The custodian, in this case, for a chama, is now the treasurer. The custodian is the one who does the safekeeping of the funds and the settlement of the funds. In most cases, the custodian is a bank. As Garang had mentioned, the custodian for Sanlam is Stanbic Bank. The administrator, this can be the auditor. Sometimes it's in-house, but it's preferable if it's an outside auditor, so that because you cannot audit your own self, it's better for an external auditor to audit you. So if you want to open an MMF account, which I'm sure many of you have MMF accounts, I'm sure this is not nothing new. First of all, research on a Capital Markets Authority regulated fund manager. You can go to their website. They have a list of regulated fund managers. You can go to Business Daily. They always have a list of regulated fund managers. You fill the proposal form and provide key details like ID copy, KYC, KRPIN, certified bank statement. But I would recommend copy of ATM because bank statements, anyone can be able to, if you have, first of all, if you have similar names, someone can do a thing with your bank statement. So ATM copy is mostly preferred. Then submit the form to the fund manager or the financial advisor, then make the initial payment to activate the MMF. Then you'll be able to get your statements at the end of the month and the fact sheets. So then you're able to top up your funds and you create a structured financial plan. If you want to withdraw from your MMF, you fill the client withdrawal form depending on the fund manager, or you send an email requesting withdrawal of funds. You state your number. It is preferable that you send the email by 9 a.m. if you want your funds accessible easily. Then the fund manager gives instruction to the custodian, since they're not the one keeping the money, it's the custodian to execute the settlement. Then you'll receive the funds on the bank account that you nominated at inception. The bank account that you provided the ATM copy is the one that you will receive funds from. Now, to maximize returns on your MMF. First of all, as you fill the proposal form, indicate the reinvest option. So this is like if you want to, you're starting from point 0. To maximize your return on the MMF, on the money market fund, click reinvestment so that you're able to compound a larger amount of your money. But this applies if you're building your capital. Sometimes maybe you've just retired, you've received a lump sum, and you don't want it to be reinvested. You are able to get a large sum of interest even if you don't reinvest. So for that option, I would advise you can click on receive interests monthly. If you have sums of $1 million or 5 million, 10 million, that is applicable. But if you want to build your portfolio, and you want to maximize returns, it is best to click indicate reinvest option on the proposal form. You let your funds accumulate for longer to enjoy the compounding effect. This is 6 months to 1 year. Don't put money on an MMF. Please, I don't know whose mic is open. Please mute. Let's put funds on MMF in today, and in 2 months you're checking your interests. It might not have a compounding effect, which takes a long time. Then consolidate your MMFs. There's no need to have numerous accounts which have minimum balances, because now you end up being charged extra management fees which don't add up. I know 2% seems like a small figure, but it adds up in the long run, especially in this economy. So if you're able to consolidate 1 or even 2, able to maximize on your returns. And the third one, deposit money on the first week of the month to maximize on the interest earning days. This is a point where, as the agents, we really find it difficult, because someone calls you, they tell you they deposit $1 million, but the interest that they have earned is very little. And then now you're like, did you get your statement? Yes. When did you deposit money? On 25th. So if you deposit money on 25th, you've only earned money from 26th, 27th, 28th, 29th, 30th. That's like 4 days only. So you can't expect to have made interest worth a whole month there to deposited almost the end of the month. So if you want to maximize on interest, please deposit on the first week so that interest is accrued daily, but compounded monthly on MMFs. Then withdraw only once. Depending on your fund manager, some fund managers charge withdrawal fees for the second withdrawal. So you really need to put your affairs in order so that you know when are you withdrawing, so that how much are we withdrawing, so that you can only withdraw once, depending on your fund manager. And some fund managers do not charge for the second withdrawal. So it depends on which fund manager you've chosen. And some fund managers, you're able to withdraw even on M-Pesa, but you're charged M-Pesa charges. So it depends on, is it your emergency fund? Is it your fund? How able you want to be able to withdraw in doing it. But the more we withdraw, the more charges you charge. If the goal that you're saving for will be spent in a foreign currency, then save for it in that currency. In this example is the USD fund. If you're planning to go on holiday to South Africa, since the Kenyan visa requirements were dropped, why should you save in Kenya shillings and then go now and transfer it back to the dollar when you're traveling? If you're saving like to go and study abroad, why don't you save it in dollars so that by the time you're leaving, maybe you're leaving next year, the dollar rate will have changed and the money that you've saved will have reduced in quantity. So that is the end of my presentation. Any questions? Please type your questions on the chat or unmute.
Hello,
Yeah,
hi.
I have a
Hi,
question.
Lavender.
I have a question. So, as a person who already has an MMF running, and I'm not
Yes.
so sure whether I ticked the reinvest option, how do I go about it? Because I'm not so sure. I don't remember what I wrote.
Did you get your statement?
Yeah, I guess my statement.
Are you able to see a consistent? Okay, you can write an email to the client services, and then request them. Tell them you request to have your interests reinvested, or you can confirm from your statement.
Okay.
Yeah.
So
Not so sure if you clicked reinvest.
I didn't know it was a thing. I'm just learning it right now.
No,
So
but still, if you didn't know, are you able to? Do you usually receive money in your account every month from the fund manager?
my which account? The Sanlam,
Yes.
the MMF account.
Yes. Yeah, the MMF.
Yeah, I
Because
normally
if you receive money monthly, because if you didn't tick, then you receive the interest monthly in your account.
I normally just get what is this thing called? The statement, and I see the interest earned, but yeah, that's just it. I
Also,
don't know more.
it's being reinvested because it would have come. You see the way you receive a salary at the end of the month, 28.
Yeah.
28. If you had not ticked, they will be sending you your interest in your account. So confirm your account also.
Okay.
Yeah.
Okay, thank you.
Yes. Wilfred, you had the same question. So confirm with you. If you didn't tick, they would have been sending you your account because most fund managers send statements by 5th. So maybe 29th to 30th, depending on the fund manager, they will be sending you your interest monthly if you didn't tick reinvest. Yes. Munene, you had a question?
Yes, I did. Thank you for that clarification. So it means if I receive my interest per month, they are investing it. Yeah.
Sorry?
If I don't receive money in my account every month, it means they are investing my
Yes, they're compounding it. Yes.
compounding it, which is awesome. My
Yes,
question
that's
was on the consolidation.
Yes.
Because I have okay, I'll be honest, I'm those Kenyans who like to diversify their portfolio. You talked about consolidation.
Yes.
I don't know. Is it advisable? Because sometimes, okay, the reason why I also diversify is sometimes I see the rates do change and do vary. So I try to keep at least three that have good rates. So I diversify my savings according to the three of them. So I don't know what your thoughts are on that.
Oh, three. Three is okay.
Three MMFs, yeah.
Okay, so which one is your emergency fund and which one have you saved like six months expenses of your, like if you are like to lose your job today, which one will you rely on? And then which one do you withdraw at most frequently? But if you're able to manage the three, it's okay. But the interest rates sometimes, as an independent agent, I'll be honest, they're almost the same. So because now they change daily and all of them are following the same CMA regulation. So the return is almost the same. So don't assume that this one has a high rate. Maybe tomorrow, you never know what may happen today. But right now the interest rates are very high because CBK is really in need of money. So we're really enjoying good interest rates of 12.7%. Yes. So I think you would maximize on that. I think for the three now, just evaluate which one is your first immediate, build on that. Which one are you able to withdraw without any charges? Also build on that. Then you can have, maybe one is your emergency fund, sinking fund, and fund. And is all of them in Kenya shillings? Or one is a USD?
Yeah, they are all in Kenya shillings, and I guess it's that 12% even there's one that's 13. I won't name names, but yes.
Yeah, as long as it's CMA regulated. But even if it is 13, once you subtract management fee and tax, it comes to the same. Yes. And let me look at the chat. There's some questions there. You think so? We need to confirm our MMF if they do send our interest to our banks. I'm not sure on that. Yes, if you didn't click reinvest, they're supposed to send you your interest monthly on your bank account that you nominated. I also didn't check my interest to be reinvested, but I did receive an amount in my account. I didn't know from where. Hey, Wilfred, you don't know where money is coming from in your account. When I grow up, I want to be you. So just confirm. Mostly it must be that. Yes. Yes. Another question? Just unmute if you have a question. Interest are paid. Yes, interest is accrued daily, but compounded monthly. So if you deposit your money on first, second, the custodian will have received it and they will start reinvesting it. So on second, it will earn interest, third, it will earn interest. Back at 30th, and then on 30th, they'll compound it by adding it to the principal, then to the next month. Is it only Sanlam that sends interest monthly if you didn't? No, all fund managers, they send your interest monthly if you didn't click reinvest. All of them. Not only Sanlam. Anyone else?
But perhaps you can clarify how retirees have used the MMFs for their lump sums.
Now, retirees, these are people who don't want their money far away. They want to spend their money. Yes, so retirees will not be advisable to put their money in a bond or even sometimes even T-bills because they are not susceptible to anything. Maybe retirees just want their money close by. So if you put your money in a lump sum in an MMF, you're able to still, first of all, if they were civil servants and they were used to a monthly salary, the MMF receiving them salary monthly would be a good substitute for that. So they are, at least they won't get that shock of, oh my gosh, I don't have a salary this month. Yes. So that lump sum, because sometimes the lump sum also confuses people. People decide to marry a second wife. It is good, and then it can be over in like the next 2 years. So it is better to put it in a place where it is accessible. Yes, still earning interest, is able to counter inflation, and they are still getting returns monthly. Yes, anyone else?
For me, the other question is, do all money market funds operate the same? And the reason I'm asking this is I know most of them are accruing interest daily and compounding monthly.
Yeah.
But then it said that Zimele actually compounds annually. So is it that it has a different structure, or is this something that is up to the MMF to decide how they will compound?
Compounds annually.
Zimele specifically.
You know, the interest rate is like the 12.7% is per annum. So it's not a day, it's not a daily rate. Is that what you mean?
No, that's not what I mean. You see, what you're saying is that if let's say I've put in money for a month, it will earn at the end of the month, I'm going to have the interest of that month added to the principal, forming a new principal for the subsequent month. But that process at Zimele seems to occur on an annual basis rather than on a monthly basis. So is this yeah, I think you've understood my question.
Now, that the key word in that question is seems to occur. So anything that seems to occur should be able to raise your eyebrows, because there's no reason why the big fund manager, let me say the top tier fund managers who are complying with CMA, they don't do that, but this other person decides they want to do that. So as an investor, you should do your research on how viable it is, how much risk you can take on as an investor. Also, don't put your eggs in one basket. You can put some 100K there, you see how much it earns. But someone is saying it's compounded monthly.
Okay, let me not ask beyond that, because I had made inquiries, and the write-up on their website at that time was talking about annually. I specifically asked about that annually to be sure that, and they did indeed say that it occurs annually. So which is in stark contrast to what happens to other MMFs.
On that question, I'll say CMA regulations require that interest is compounded monthly.
Thank you.
To be safe, just follow CMA regulations. Just to be safe, follow CMA regulations. About consolidating to one account instead of more than one, but I'll be getting interest twice. What's your take on that? You know, the interest is subject to management fee and withholding tax. So even if you're getting interest tax, if it is taxed twice, you also lose a bit. So, but if you have 5 million in one MMF, 5 million in another MMF, no, please don't consolidate. Let them remain separate. I was saying, like, if you have 10K in one MMF, another 10K in another MMF, another 10K, that does not make sense, because now you're not able to maximize on your returns. If you're able to build up your emergency fund, your sinking fund, your fund, building them up together, it's okay. Yes, another question? Yes, thank you, Wilfred. And if you don't have an emergency, if you don't have a money market fund, this is your chance to open a money market fund and experience great returns at the moment. So please leave your details. I don't know if the Google Sheet has been able to, someone had that. Are you still able to share your contacts in the Google Drive? You need an account? Yes, Dominic. Please side chat me your contacts. Phyllis, yes, you don't have an account. Yes, please side chat me your contacts also. I'll reach out to you. Anyone else who needs an MMF account? Yes, do you know how to chat directly? Yes, please do. The Google Sheet, let me check on it. Any more questions before we close up the meeting? Thank you so much for joining. Yes, you can also send here. If you're not able to access the Google Sheet, you're able to take notes from here. Anyone with a burning question? No, just your number and email address. Thank you, Patricia. When's the next one? Okay. Next one on MMF or another topic. Maybe you'll give me suggestions of topics that you want to be covered. The next one. Thank you so much for joining. Bond. Munen, I did one for bonds. Okay, share your details, Munene. I will be able to send you that. So thank you so much. Any final words? Anyone with a burning question? Just unmute if you have a question. So is it okay we end the meeting here now? Thank you so much for joining. Have a lovely evening.
Thank you. Thank you so much.
Thank you.
Hi, Valentine.
Hi, Linda.
Hi, I'd like you to call me. Talk me through this. I'd like to open an account.
Yes. Oh, let me give my details here.
Okay. I'll just take a screenshot and then call you, get back to you.
Yeah. This is my email. Welcome. You're welcome, Jenny. So please feel free to reach out to me and open MMF accounts. You're welcome, Maureen. Yes, you're welcome, Dominic. Stop recording.